Joining me now is Thami Netha from Shiloh Capital to give us his take on the latest movements in markets. Thami, thanks so much for your time this afternoon. Long time no chat, so we have lots to talk about this afternoon. Let's kick things off with what's been making headlines in the States. President Trump back at it again, firing Fed Governor Lisa Cook. Now, sentiment, of course, taking a knock following that announcement as it brings about concerns about the Fed's independence yet again. Is this something that's been top of mind for you? Just thinking that Trump has been meddling in the central bank, calling for rate cuts. He's also called for Fed Chair Jerome Powell to be axed. He then backtracked. But, he's been doing a lot when it comes to meddling and trying to persuade decisions in the Fed.
Yeah, I think Donald Trump basically wants to control monetary policy, which unfortunately is a challenge given that central banks by design are supposed to be independent. So he wants to have ultimate influence. He wants to make sure that the central bank does as he asks or he sees fit, and he's taking actions towards that. I think he's learned from his previous stint as president how monetary policy impacts especially financial markets and how that may potentially boost the economy statistically at the very least. So he's very keen to get back control of that part of the economy or that part of the governance part of the economy.
And I wonder how this will play out if the member they replace Lisa Cook with is, more of a Republican kind of governor, and how that then shifts monetary policy decisions moving forward.
Yeah, I think at this point it's no longer a Republican-Democrat situation. It's a Trump or no Trump situation. So he's looking purely at how do I get my way of doing things across the line. Everything else at this point is really irrelevant. And I think it's a view to warn global leaders around how they are saying we want to lead policy. So Donald looks around and he sees China, he sees Russia, he sees these big countries where the leadership can determine up front what's important. They can lead these parts of the economy, they can lead these parts of government, whereas he sits on this side of the world where it's a largely democratic view and he can't have the same influence, say, Xi Jinping has over monetary policy. So he's now taking action to say, if I'm in charge, if I'm the elected president, I want to make sure that monetary policy follows what I think. If I'm going to go down, I'm going to go down on my policies, not on someone else opposing me.
Hey, really interesting times ahead. Hey, I've been saying that it really is Trump's world and we are all just living in it. Let's move over to some company news. Master Drilling posting an increase in profits, mainly on the back of a partial impairment reversal, though. Just your reading on its performing. Has the group managed to really weather these tough trading conditions?
My answer would be yes. I mean, almost a 400% increase due to that adjustment. But I think it's important to look at their project pipeline and their focus on technology. They're diversifying a lot and they're driving towards a lot of future growth. So I think they've weathered the storm. And unfortunately, when you're in these sort of industrial mining type industries, you are largely a price taker and have to manage costs more than sort of drive revenue further because you're a price taker. So their headlines earnings per share has grown US dollar terms about 7%. So that's a good thing. It's a good thing to see revenue growth. It's a good thing to see them correcting their impairments. And I think they've sort of weathered the storm and will continue to grow well.
All right. Over in the financial services sector, Old Mutual expecting a profit bump and forecasting adjusted HEPS growth of up to, I think it was 41%, if I'm not mistaken, pointing to favorable equity markets, both in South Africa and Malawi. Markets really liking that update. I think the last time I checked, it was up 6%. What have you made of that?
I think these are good Yeah, so Old Mutual is a bellwether stock, so it gives you a view of where the economy is to a large extent, how people are viewing investment activity, and also how they are viewing their spend. And I think when you look at their broad approach, they even got some business in Zimbabwe, which profits weren't great, but they have got a broad sense of understanding what's happening around in the financial services. So you can really understand and tap into a financial services business that focuses on core operations. So our view is that they are a leading indicator of where economic spend is and how people are viewing their future income. So when a company like that stops having people contributing, putting in money, saving, investing, it's an indication on a squeeze on consumer spend. So that those kind of results are the kind of green shoots which we need right now.
And you mentioned something important there around consumer spend. Buildings materials retailer Cashbuild also out with an update today, expecting earnings to tick higher. While the group hasn't provided a reason for that uptick, it seems to be posting better numbers than what we saw from Italtile yesterday. I think HEPS there were up 2%. Does this speak to a more cash conscious consumer that's looking for deals, considering that Cashbuild leans more to the affordable sort of market, whereas Italtile leans more to the premium kind of brands?
I think it speaks to the price sensitivity of the consumer. So Cashbuild's performance is a key barometer to the economy and how consumers spend. So these results speak to the price sensitivity of the consumer, how there's a slow growth in the home improvement spending, and if you contrast that to other areas, as you said, Itatao, one would be looking for a more robust consumer rebound over the course of the year. That 4% up on the quarter indicates that. But I think the broader indication is around price sensitivity, that the South African consumer is now significantly more aware of pricing comparatively and comparability, and they will spend where they can find a value and price sort of nexus that helps them save money but get the right quality.
All right, let's hit pause on the conversation. Before we get to your stock pick, let's take a moment to touch on what counters your industry peers are watching closely.
Naspers, yes. It's sort of my favorite locally available play on AI, I suppose, and it has been a barnstormer performer. But we track the discount over time, both the discount relative to Prosus and the discount relative to Tencent, and that the discount relative to Prosus in particular has moved to the widest level we've seen in the last 24 months or so since they started aggressively buying back shares, and that has historically been quite a bullish sign for acquiring Naspers. So even though I'm long both Tencent, Prosus, and Naspers, that becomes my preferred vehicle, and I'd switch all of that exposure into Naspers at this level simply because it's presenting more upside from that sort of technical discount level, because there has been more liquidity seeking from the Naspers shareholders relative to the two other names, and that just makes it the cheapest entry point into that Tencent opportunity.
A fellow commentator once said, if Amazon and PayPal went to Latin America to have a baby, that would be MercadoLibre. And yeah, they're great. They've got a lot of revenue coming from commerce, about 55%, and then a big fintech arm, so hence the kind of PayPal and eBay similarities there. They're dominant in about 18 countries. And I think what I really like about them is their logistical network they've set up. Huge capex going in their last financial year, about $9 billion. And that just creates a massive moat that's very difficult to replicate. Strong balance sheet, lots of cash, low debt, and great margins. So, yeah, one to watch.
So, Devin, picking a tongue twister there, MercadoLibre, I think it is, and Kwaba's going local with Naspers. Just your analysis on those counters.
I think both are focused on e-commerce. Naspers is looking especially at the delivery and food side. MercadoLibre is attempting to challenge a lot of what Amazon is doing. I think their key advantage is their logistics, and they deliver 94% of the stuff that's ordered on their platform. So that's the key risk. I think there will be a takeover bid for them. I think a big business like Amazon, or even Process itself, I think is going to make a bid for that business. I think Process is going to continue to try to build out its e-commerce platform. I think they have to prove that they are bigger than Tencent right now. So you won well, you won in Tencent, and we've received value as shareholders for that. What can you do next? And that would be the question for Process Naspers.
All right, then let's get into your stock pick. What are you hanging your hat on this afternoon?
SGX Group, Singapore. That's the Singapore Exchange. They've started turning around their business quite well with significant growth. The IPO market has changed quite a bit. They've got 30 companies in their pipeline. They have great regional leadership and good value. I think they've grown 30% this year, or year-on-year growth 30%. So we think they're going to continue to pick up. They're dealing in a very active region of the world with a lot of scope to bring companies on board in Southeast Asia. So we're looking at SGX Group.
SGX Group, one to look out for. Thami, thanks so much for your time and joining us for our market analysis at midday. Now that was Thami Netha from Shiloh Capital.